down 51% in 2022. Is the trade desk stock a buy for 2023? I'm going to answer that question in this video before it's over, so stay tuned. I'm going to look at a few metrics, so let's get right into it. The first thing I'm going to look at is revenue growth quarterly going all the way back to 2016. And you can see the trade desk has experienced very nice revenue growth over the years. Of course, the choppiness you see here is the seasonality of the business. The trade desk offers digital advertising services, and marketers like to advertise during certain times of the year, like for instance the holiday period and the back to school season tends to draw more advertising dollars spent as marketers look to attract consumers who are in the mood to spend a lot more money during those specific times of the year. The next metric I want to look at is the trade desk's total assets and total liabilities on a quarterly basis. And what I like to see is total assets growing more than total liabilities. Of course, I don't want to see the company growing by adding a lot of debt to its balance sheet. And I also want to see total assets growing at a slower pace. I don't want to see a company um, increasing its sales by adding new assets to the balance sheet. I don't like to see too much of that. I want to see the existing asset base bringing in more and more sales, right? That's what I like to see from businesses. And nothing alarm. I don't see anything troubling from the trade desk's asset and liability growth, especially considering that it has been growing its revenue relatively quickly over the years. And the next metric I want to look at is the trade desk's cash flow from operations on a quarterly basis going back before 2017, and a steady upward trend. We could see again the fluctuations in the business related to the seasonality of the business. But if you were to draw a line from the starting point here to the ending point there, you could see a nice upward trending cash flow from operations quarterly. And if you compare, let's say in the most recent quarter, 137 million in cash flow from operations on 394 million in revenue, that's a pretty good cash flow to revenue conversion rate. So solid all around for the trade desk in terms of top line and turning that top line growth into cash flow growth. And the next metric I'm going to look at is average diluted shares outstanding. What I often see with these types of companies, tech companies that are growing rapidly and have limited profits but have excellent cash flow, one of the main reasons for that happening is because they pay a lot of their employees in stock-based compensation, which they need to expense on the income statement, but then it still comes up positive for cash flow because it's not a cash expense. But the downside is that it potentially dilutes shareholders, right? And you see that with the trade desk, but not to an extreme fashion, right? It started with around 450 million shares outstanding in 2018. That's grown to about 500 million shares outstanding. So about 10% dilution in existing shareholders. Not too alarming in terms of the uh, shareholder dilution. There's companies that are much, much worse than this. Just off the top of my head, if you want to see something troubling for in terms of share count expansion, look at Roblox and DoorDash. Their share count has grown rapidly. So the trade desk not alarming here. So far so good for prospective trade desk investors. The final thing I'm going to look at here is the trade desk's valuation. And to determine, I'm going to use the price to free cash flow and the price to sales ratio. And first, looking at price to free cash flow at 45.6, it's the lowest that it has traded for going back all the way to 2018. So it's relatively inexpensive in this regard. However, a price to free cash flow of 45 is not cheap on an absolute basis. That's a relatively expensive stock looking at the entire universe of stocks that exist in the market. And then looking at the price to sales ratio of 14.92, Going back, that's about the cheapest that it's been, all the way going back to 2019. It was a little bit cheaper in 2018, but the cheapest it's been since then. Again, though, a price to sales of 14.92 is expensive. It's really expensive. So in both regards, I would say the trade desk stock is, even though it's down considerably in 2022, that doesn't necessarily make it a cheap stock. And in fact, I will say it's not a cheap stock. So to answer the question, is the trade desk stock a buy for 2023? I'm going to say not at these prices. Not at these prices. I'll admit it's an excellent company that has robust prospects over the long term. More advertising is moving digitally, and the trade desk has done an excellent job in executing its strategy. However, that's arguably priced into the stock right now. So I would wait for a further pullback if I was looking to invest in the trade desk stock. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.